Welcome to your Space Coast Real Estate Update for May. We're sitting in the beginning of June, so we're going to look back and see what happened in the month of May. So we're not seeing the normal yearly cycle in inventory. So historically, we see inventory rising from January all the way and peaking maybe in September or October. It's been opposite this year. Inventory has decreased from January to the present, and for the past 2 months, we've remained steady with just about 2,000 homes on the market. So what this means is throughout the beginning of the year, sales have outpaced the number of new listings coming available, and now we're basically about even. So as we've talked about this before, the main reason is because sellers, they're staying in their properties because they have a very, very low interest rate, and they're not going to trade out a 3% interest rate for a 7% interest rate. So let's talk about interest rates. Last month was crazy. We saw interest rates skyrocket over 7%, actually to 7.2%. This is because of the debt ceiling. It looked like the US may default if Congress didn't raise the debt ceiling. So fortunately, Congress did raise the debt ceiling, and we almost saw rates drop back down immediately. So by May 31st, we saw rates at 6.8%. So pretty big volatility for the rates in May. So rates drive a lot of buyer demand. So when rates rise drastically, mortgage applications decrease. So we saw mortgage applications decrease by 10%. Also, we had kids getting out of school. So for the past 2 weeks leading up to Memorial Day, things are pretty slow. But now, that week after Memorial Day, we're seeing things pick up again. So regarding pricing, in this market for many months now, we've seen pricing remain flat, coming off our highs of 2022. And we're even seeing some increase in pricing for properties that were built in the last 2 to 3 years. People are really favoring the newer construction because of insurance and because, like I always say, we live in that HGTV generation where people are wanting the newest, latest, and greatest. So we're seeing people paying a premium for those properties, and we're seeing prices rise a little bit in that sector. Other sectors still flat. So what's keeping pricing stable? So one, we've been underbuilding by millions of properties over a decade, leading to this housing shortage that we're seeing now. So number two, the pool of buyers, especially for affordable entry-level homes, that pool of buyers keeps expanding as we're seeing millennials and retirees often compete for the same homes. Number three, building materials and the labor to build, repair, or replace homes, those costs are still going up and they're not dropping and are unlikely to do so when we fully see that $1 trillion infrastructure spending go underway. Number four, natural disasters, and keeping in mind that the housing stock is on average about 37 years old right now. So this adds to the stress and demand in building materials and labor. So again, we're not seeing those costs come down. So all these parameters are helping keep pricing stable. So in closing, be very aware of what types of properties are selling and make sure that your property is priced and marketed correctly. If you do that, you can expect a sale in 30 days. So buyers, we know it's tough. Interest rates are high and we don't expect pricing to come down anytime soon, despite all the doom and gloom headlines or clickbait you might see regarding a housing crisis. So my comments are, we have a housing shortage combined with 42% of homeowners owning their homes free and clear. The balance of homeowners are locked into a rate of 4% and below. They have lots of equity, so not exactly the ingredients for a pricing meltdown. So a good time to buy, it's very personal. Time dilutes risk. So if you're going to stay in your home 7 to 10 years, paying a little bit more interest rate or paying a few $1,000s more or less, it doesn't matter if you're staying 7 to 10 years. If you're going to only buy and sell in 2 years, well, those parameters start to matter a lot more. So if you're considering buying or selling and you want to take a data-driven approach to the marketplace and understanding what the market's doing, where the market is heading, our team is ready to work for you. So thanks for watching, and we'll see you next month for State of the Marketplace.